Welcome back to the channel. In today's video, we're going to be talking about where is the stock market going. Welcome back to another episode of the weekly market update, which comes out to you every single Sunday. So make sure, and I'm telling you, make sure, do yourself a favor, subscribe down below because you don't want to miss this every single week. We've been scary accurate every single week, so you definitely want to be up to date with this kind of videos. So we're going to be going over what has been going on in the market. It's been quite a choppy week last week. Pretty much ended the week down about percent or so, 1.25%. But we see just a bit of, we've seen these little boxes, just a choppy week, right? Especially Friday was not the best days. It was just an inside day. We had Thursday, which was a pretty nice bullish, most bullish engulfing day, which we thought could give us a little more upside. But then some negative news came out the next day with Elon Musk announcing he wants to cut back on jobs because he thinks the economy is not going the right direction. And he's very scared of that. Now, do we believe that? I mean, the stock market sure did. It gapped down and kind of had a negative inside day on that day. Now, is he just saying that because he wants to cut back some jobs and save some money and use the economy as an excuse? I think it might be potentially so. But let's take a look at the market structure. And I was just really thinking about something, this head and shoulder pattern. And, many people had pointed out this topping head and shoulder here, the top here with the all-time highs. And, if these had played out, it could have been really bad for the market. I'm not saying it's completely out of the picture, but, people shorted around this area thinking it was going to be a breakdown of this head and shoulder pattern, which, if we were to, it would have been about, from the top, potentially a 50% retracement, which would have taken us about back to pre-COVID levels. I know a lot of people were watching that head and shoulder pattern, and they thought, at least the bears thought, they were getting the breakdown, but it happened to be just a fake breakdown, which now got reversed back up. Now, ideally, in our bullish case scenario, we do believe the bottom has been in. We believe this was the bottom. We bought on Thursday, a couple of weeks back, on the May 16th, and we believe that was the bottom. In our case scenario, this will be a great reversal pattern. A lot of times when you get these fake breakdown of these fake breakouts, it is a reversal conditions, just like we saw up here. Everybody thought we would get above this double top. Boom, it was a fake breakout level. And we see that oftentimes, even if we go back to about this double top area here, like when we had this double top that everybody was shorting, right around this area here, this 472s, we thought this was the top. And then we thought we were going to be going down. But what the market makers do, they make it break out for a few days to shake out those, those bears. They're getting a little too early to get to Ansin, and they brought it all the way down. So you do have to really keep an very close eye on these fake breakouts and these fake breakdowns in the stock market, because a lot of times they will show its hand. The market makers they're not dumb people. Not all of them. Some of them are. You see the famous one, like the Cathy Woods of the world, and some other ones are really famous. But there's a lot of hidden market makers, people that you never heard of that are controlling this market. And they understand everybody's keeping an eye on this head and shoulder pattern. So they want to make a breakdown to trap people that were keeping an eye on it and then bring it back up. Now, I do think we'll still see a little bit of a slight pullback. Ideally, I don't want to... I would like this. That looks like a little bit of a bull flag. I would like this to retrace. I would love it to retrace around the 400 level and push higher. Give us a higher low. A higher low is very important. A healthy, steady uptrend is very, very important. I don't want to see what we saw earlier in March, this strong rally up. When you have just a strong push up, you always come back down crashing, which we saw. But if you have a healthy push up, slow and steady winds raise, we're much better conditions. And we saw this even with this breakdown here. It's a healthy downtrend. Now we still have a lot to prove. I believe the bottom is in, but there is a little bit of a chance. I will give it about 15 to 20% chance we do have another fake breakdown. A lot of people taking longs around this area. They have the stops red there. Could be a situation where we might have a little bit of a fake breakdown and set a new low before they bring this thing back up. But I do think this is the bottom, or extremely, extremely close to the bottom. Now I wanted to point out the 2-year treasury, the government bonds, 2-year bonds, and they've been really, they've been crushing it since 21. About 6 months now, it's just been going on a steady push higher, and this has been really caused on why the market has pulled back so much, because these 2-year treasury bonds puts a lot of pressure on S&P 500. If we add the SPX, comparing it, you can see as this thing start rolling, and it's not only the pace of which of the rally, it's also how much how fast it's going higher. You see this as the rally really started down here. We saw S&P 500 starting to go down, so they have a negative correlation. If the 2-year yield goes up, people are more inclined into pulling out their stock portfolio. This last push higher, that bottom that we was pushed, was very much caused also because we have finally some good stabilization in the 2-year note. We're hitting major resistance, major demand zone here up on the 3%. If we get rid of our percent right there, right here up on the 3%, and we hadn't seen the 2-year being this high. If we go to our monthly chart, since pretty much the 08, it's pretty much 2018 and 08 right here, we see just a strong, just massive rally up. Now, if we see a pullback in the 2-year, if we see a cooling off on the 2-year, maybe down to this 1.72% zone, we'll definitely start seeing a stronger uptrend in S&P 500. Now, if we take a look at the US dollar, DXY, which we told you was hitting major resistance, we told you it was going to be cooling off. It had this fake breakout, and we talked about this fake breakout, and it has been cooling off. It came down after, again, a super strong rally since 2021, July of 2021, just been a monster rally, especially the last few months, last 3 months. And if the dollar is doing well, puts pressure on the equities. Now, again, it's hitting this resistance. If we see this cooling off down to the 95, 99 area, could be really good for the S&P 500. These are indicators, things that you need to keep an eye on when you're to understand the market condition, a healthy market condition. Now, if you see the S&P 500 going higher, you see the dollar going higher, you see the 2-year yield going higher, like we saw in March, you're probably more than likely going to have a fake pump. You're going to have a fake pump. It's going to come back down. But now you see the S&P 500 pumping. You see the dollar cooling off. You see the 2-year, the 5-year, the 10-year treasury yields cooling off. You have a nice, steady, healthy uptrend. So it's things you got to keep an eye on. Let's take a look at the triple Q on the daily time frame. Let's move in, zoomed in. Very similar with the triple Q. You got to keep an eye on S&P 500. Nice breakout right here on this double, really like a nice breakout on this downtrend here. Retested this wedge here and then broke out of it. Again, very similar to the S&P 500. Since we broke out this downtrend, we could see a retest this 300 area, which I wouldn't be against, and then trying to push higher. And again, very similar to S&P 500, we could see potentially, I give it a 15% chance of this second scenario playing out, a fake breakout, fake breakdown under this 280 area here, just to trap all the people that long, because the market makers just like to play games. They love to play games. They know everybody's watching certain levels. They love to play games. That's why if you trade with me, I have really, I use a lot of mental stops and understand just the situation, understand where the market is going. It's a psychology game as much as a technical game as much. It's all things that you learn through experience. IWM, we finally hit this this first demand zone up here after, we're breaking through it. We set a nice, IWM really looking a little bit better than a little bit better than triple Qs and the SPY. This huge, nice candle here. Now, inside candle again, like the rest of it. Now, we would love for this to find some momentum in here and kind of push higher, or maybe take potentially a long position here. If we retest it, we kind of coil up inside this area here for next leg higher, or potentially even next leg higher. Remember, stocks they contract and expand. They have contractions, and then you have expansion. You have contraction, you have expansion. You have contraction, you have expansion, contraction, expansion, contraction, expansion. I can go on and on about it. Contraction and expansion. That's it. Now let's take a look at gold. Taking long positions on gold. Aiming for this gap at 180. I told you guys last week. I like where gold headed. I like the buy level that gold gave. Retested this breakout area here. If you don't extend this all the way down here, I really like where gold is. I really think that gold will see higher, especially with Bitcoin struggling lately. I think a lot of people are positioning to gold. Gold is one of those lower plays that you gotta have patience with it. I still think it is a good buy level. I think this 180 gap will soon to be filled. And we also have this gap up here at 188. And I do think we'll see another all-time high potentially by the end of this year or early into the next year, into the gold trust, the GLD, the GOLD, XME. If you want to trade something a little easier, GLD is usually not the best. XME usually tends to trade much better. It's been respecting our levels very nicely. You see here it came down to retest its previous breakout level right here. This major breakout level over 48, had a massive run to 65, came down to cool off till bottom right here, pushing higher. It does have a little bit of somewhat of a head and shoulder look, kinda. You can make that argument, but I definitely do have my eyes on the precious metals again after not talking about them for a little bit. Now if we go to US oil, the WTI crude oil, another play that you should have been in with us, which we talked about on the channel plenty of times. We see again this bullish, we talked about this many times, bullish triangle. You got the breakout, you got the retest the breakout, and now just pushing higher. A lot of tickers that we love to trade is XOM, OXY. All things have been just pretty much ripping, and oil investors have been just laughing since the beginning of the year. They've been on a complete tear. I thought gold would be looking much similar to oil. It hasn't, but it is what it is. You just adapt and you trade. Same thing with XLE, finally trying to get that next all-time high level push over there. Another one that's been on a tear, something that we trade day in and day out. If you go to Finviz on the daily relative performance, you see energy again just strong compared to the rest of the market. The rest of the market destroyed. Finviz, energy still holding strong. 1 week relative performance, everything was pretty much green on anything. 1 month relative performance, energy, utilities, basic materials, trying to turn green. But you see a lot of things are recovering a little bit more. 3 month, half year, you just see that pretty much energy has been crushing it, but things are making a little bit of a comeback. So that's all for me for this week. That's the things I'll be looking at. I mean, the guys below, what are you gonna be looking at? What do you do you think the bear market is over? You think this is just a nice little rally up and then we're gonna go make a new low? All your thoughts down below. I appreciate everybody's thoughts. If you want to trade with me live every single day, if you want my live entries and exit, guys, I'm not just one of those YouTubers that comes making weekly videos. That's it. I trade live every single day. Members are making bank. Hit the links down in the below. Join our premium Discord chat room. If you want to learn more about stock market, the crypto market, make sure you subscribe, comment, like. It helps other people that have not watched these videos learn and really get better at it. So appreciate everybody stopping by, and as always, peace.